Welcome back. You're watching Midcap Radar on CNBC-TV18. And now from one management to another, InfoEdge reported their Q4 numbers and the company saw muted revenue growth in the quarter gone by. Their margin also came under pressure. My colleague Vinnii Motiwala spoke to Chintan Thakkar, whole-time director and CFO at InfoEdge, and began by asking him about hiring trends across sectors such as IT, BFSI, healthcare. Listen in.
When you look at the overall trend, yes, April, is slightly, like you suggested, that it could be slightly slower. But if I take a very broader look of the JobsPeak index, as well as, what we are seeing in terms of, we have just recently announced the results. So what we have seen in terms of the monetization, I think we are seeing that it has been a strong quarter in the past. And what we are hearing from the market, is that this seems to be a kind of a momentum which is continuing. Well, I know that this is not exactly what the overall scenario looks like, but on the ground, it seems that we seem to be doing better than what probably JobsPeak index suggests. And this is yes, IT. When I speak of IT is a very large sector, but if you kind of slice and dice, for example, GCC seems to be doing much better, right? Some of the IT product companies seem to be doing much better. IT services, which are mainly the export-driven kind of a segment, I think there, it seems to be a little, sluggishness. That seems to be a little slowdown over there, and that has been the trend, past, many quarters. But otherwise, non-IT, for example, you talked about the BFSI, the healthcare. I think they all seem to be suggesting, that there's a momentum. Tier 2, Tier 3 towns seems to be suggesting that there's a momentum. So given the fact that our billing has last quarter grown by almost like overall equipment solution has grown by 18% plus, I think that indicates that the otherwise the on the ground, I think there seems to be a good uptake.
Are we seeing any sort of an impact because of this uncertainty of Trump tariffs? So my question comes in, are we seeing any impact of that? And are you also seeing any impact given that AI also is coming in? So in terms of the trend, is there a clear shift on that front as well? And do you expect that billing growth, like you mentioned as well, around 18% that you saw this time in Q4, will that continue in FY26 or a better growth is what one could envisage now?
Yeah. So the impact of, let's say, the technological development that are happening, right? AI is something which is most talked about, and it's a mixed bag. There are certain segments where, let's say, the guys who are there in areas which are related to AI, right? Machine learning, data science, some of those jobs, I think they are highest in demand. I'm sure this year their increments and everything also would be very high. So there seems to be a demand-supply gap where demand is very high and supply is limited, while some of the segments, which is more like a PPO type of segment, customer support segment, that's where we are seeing that there could be some impact of AI. Although even in that segment, in terms of the quarterly numbers that we have, I think there seems to be a bit of growth over there as well. But we do hear some kind of slowdown in some of those type of segments that we anticipate. But in the high end, I think there's going to be a much more demand. I think there is a kind of a shift that may happen in terms of the job profiles, but overall we are not seeing anything which we would indicate that AI is kind of impacting us directly, right?
Absolutely. And billing growth, sir, will we expect this 18% rate that we saw in Q4 to continue for this segment?
Look, most of our billings happens in the last few days of the end of the quarter, right? So this is little too early for me to say that what the billing would look like.
Mr. Chintan, what I want to know is in terms of 99 acres, real estate trends, how did that shape up quickly in Q4? And, losses seem to have, quarter-on-quarter basis, I'm saying, has seemed to have expanded a bit more or increased a bit more. So, what are we expecting there as well? On the PBT front is what I'm looking.
Yeah. Again, when you look at the this quarter picture as well as the full year picture, I think we are for the full year, and we had promised this earlier that our goal is that we kind of become EBITDA neutral, and I think that's what we seem to have achieved. We are almost there. And if you look at the billing and the total expenses and the total cash expenses, if you look at it, then on cash basis, we are kind of EBITDA neutral. In fact, in this quarter, in Q4, we have generated cash, which kind of offset some of the cash burn that happened in the previous quarters. So I think this quarter has been encouraging. Also, what our understanding is that we seem to be gaining in market share, which is even far more important than just the cash break even that we are talking about. So it's very encouraging. We'll continue to push the pedal to gain more and more market share. And again, I think I must add here that AI is really helping us in getting the cost efficiency, whether it's marketing or whether it's also in terms of how we go to market.
Sure.
I think it's really helping us. It's also helping us in a business like Jeevan Sathi in terms of how our algorithm works. I think they are far more sophisticated than what it used to be in the past.
So for Shiksha, a quick question. There's higher visa rejections now in the US as well. There's so much uncertainty over there in terms of universities. Are you seeing any change in terms from that front, in terms of customer trend moving more towards the domestic market? And also the billing growth, that's 16% for Shiksha, while revenue growth is at 1.6%. So what is the reason for this gap, that I'm seeing in billing growth as well as revenue growth?
Yeah, so again, a great question, because when you split the Shiksha into domestic business as well as the study abroad, like you said, we have a lot more headwinds, and this is actually kind of declining. But domestic business is growing at a much faster rate. So when we aggregate, I think the real growth story of domestic business actually does not come out. So domestic business is doing very well. The difference between the billing and revenue, like I said, that look, billing is the lead indicator. Revenue is what happened in the past few quarters. So I don't see there's too much of a gap over there. But I think one should really look at from the business analysis standpoint, one should look at the billing, because that it tells you what actually happened in the quarter and what the trend line for the future looks like. That sets the tone for future.
Okay. And so last question on Jeevan Sathi, obviously you spoke a bit about it. The losses have also narrowed down. So can we expect in FY26 Jeevan Sathi, in terms of the PBT level, we would see some profit there, as well as competition? How is that shaping up right now? Outlook for FY26.
Yeah. So look, when you look at Jeevan Sathi, there are different markets. There is no one national market.
Yeah.
Market is split in terms of the different communities and geographical regions and linguistic kind of different classes, right? So where the place where we are stronger is mostly it's Hindi belt, and Hindi belt seems to be growing, and we seem to be cementing our leadership position over there, right? So in some ways it is very it's not appropriate comparison to look at us directly with the competitors. Let's take Bharat Matrimony, which has got a strong brand in the southern region, but we don't have much presence in the south, right? So we are far more north and Hindi belt, so it's very hard for us to really compare that.
Okay.
But we made certain changes about how we go about our platform. We made it about 3 years ago, and that seems to have worked for us, and that's why now we are seeing that not only the revenue and the billing seems to be growing. For example, this year, overall we have grown, for the full year we have grown at like about 30% plus. Mm-hmm. That's a very healthy growth, and with that growth we have been able to achieve EBITDA neutral.
Well, that was the management of InfoEdge. The stock as of now is taking a hit. The stock is down almost 1% in trade, but has seen a recovery from the day's lowest point. But that's all we have on this edition of Midcap Radar. From Mangalam, me and everyone who put the show together, thank you for tuning in. But don't go anywhere, because we have your stocks up next.